Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. In today's episode, we're going to be going over Tesla's Q2 earnings that were released recently. Now, this was a major announcement. They blew it out of the water. Tesla had a record-setting quarter on all levels. Analysts weren't even close to what Tesla delivered. So this is a very important video for the thesis of Tesla as an investment. In this video, not only are we going to go over the financials and the results, we're also going to analyze and pull apart all of the little breadcrumbs that were left for us from Elon and Drew Baglino and the rest of the team, so we can understand how to look at Tesla moving forward into the future for our own analysis and our models. Also, one last thing. In this video, we're going to be going over the new way that Tesla will be reporting their quarterly earnings moving forward and what's going to change up as far as personnel there. So make sure you stick till the end so that you don't miss any of that. Okay, do me a favor. If you enjoy this type of content, help us out. Hit the like button, hit the subscribe button, and without further ado, let's go ahead and get into it because we have a lot to cover. Okay, so let's go ahead and take a look at the actual release from Tesla and all the figures and their numbers. So first we see here, we have the Q2 2021 update, and we'll just get straight into some of the highlights. So first highlights, cash, operating cash flow less CapEx of 619 million in Q2. This is a record number for Tesla. Net debt and finance lease repayments of 1.6 billion in Q2. So what this means is that they went ahead and they repaid 1.6 billion of their debt. So if you don't know, Tesla has right now about anywhere from 16 to 18 billion dollars on hand and about anywhere from 7 to 9 billion in debt, okay? One of the few automakers who have more cash on hand than debt. And that, in fact, they might be the only auto manufacturer out there right now with that kind of standing where they have more cash than debt. And so Tesla is slowly starting to repay some of their debt. And the rumor out there is that the reason they're doing this is to have less debt on hand, of course, but also to go ahead and get higher credit ratings so that they can then get cheaper debt. You could think of it as almost like a refinancing of your own debt. So this is very interesting. In total, 912 million decrease in our cash and our cash equivalent of Q2 to 16 billion 200 million. Okay, so let me break this down. This is the amount of debt they have now after they repaid 1.6 billion in debt. And the reason it says 912 million decrease is because if you take the 1.6 billion and you subtract the 619 million that they received from operating cash flow, right? So this is how much revenue or cash they generated for the quarter. You take that, subtract it from the amount of debt they paid, they really only took down about 912 million from their whole pile. So looks like they had about 17.1 billion cash on hand, and now they're 912 million less. So that leaves them at 16.2 billion. So again, still a lot of cash on hand. They can do whatever they really want. And as you can see here, 619 million. I mean, their treasure chest is starting to grow faster and faster. Profitability. Okay, 1.3 billion GAAP operating income, 11% operating margin. Wow, this is amazing. So historically, this is about 5.8%, like would be amazing. 11%, that is knocking down every record Tesla has ever made. I mean, this is, I can't stress enough, this is a record-setting quarter. Not just like, hey, they made an incremental surge or an incremental progress. No, they busted down the door and they blew it out of the park here. Blew out of the water. Okay, 1.1 billion GAAP net income, 1.6 billion non-GAAP, just absolutely phenomenal. Okay, here we go. This is important. 28.4% gross margin from the automotive side. 28.4%. That is phenomenal. That they are crushing any other auto manufacturer out there. No one else sees 28.4% margins. It's unheard of. Okay, 25.8x credits. Oh my goodness. Okay, so the big knock against Tesla is constantly that, oh, they're not profitable because all they do is sell these tax credits or these essentially clean energy credits that they have to other companies who would otherwise have to take a penalty hit for not making enough clean vehicles. And so Tesla will sell their credits to them. And so people tend to say, well, Tesla isn't really profitable because if you take away these credits, then they're actually losing money. This is the first quarter that Tesla is profitable even without the credits. So that's a big deal. Even bigger deal is that without the credits, they still hit 25.8 gross margin. This is incredible. My model is completely off. I mean, I don't know anyone's model who projected any of these numbers. This is such a blowout. Even us, like extremely uber bulls, people who, we admit we have these biases towards Tesla. We're fanboys, fangirls, all that. Even we were way off on this. I mean, this is just insane. Okay, operations. Record vehicle production for delivery 2. That's right, we knew that. Successful launch of FSD subscription in July. We knew that. If you want to know more about this subscription, I have a video about it. Check it out. Started delivering the new Model S to customers. Yeah, so keep in mind, very important, this record-breaking quarter is on the back of pretty much just the Model Y and Model 3. Only about 1,900 Model S's were delivered. So this is without arguably two of their vehicles, two of their product lines, but also arguably their most profitable vehicles, right? With the highest margins. That's a big deal. Okay, so let's see. In summary, second quarter 2021, we broke new notable records, produced and delivered over 200,000 vehicles. Achieve operating margin of 11%. Again, I'm telling you guys, this is a big deal. This is why they're calling it out again. Exceeded 1 billion net income for the first time in our history. It's happening, right? That snowball effect is starting to happen. Okay, supply chain challenges. This is important. In particular, global semiconductor shortages and port congestions continue to be present in Q2. So port congestions just meaning all of these roll-on, roll-off ships, these vessels that deliver the vehicles from one country to another, they're having a lot of port delays. The Tesla team, including supply chain, software development, and our factories, worked extremely hard to keep production running as close to full capacity as possible. With global vehicle demand at record levels, component supply will have a strong influence on the rate of our delivery growth for the rest of this year. Okay. Well, we expected that, right? That's not really any news to us. We successfully launched Tesla Vision in Q2. We know about that. That's without the radar for FSD, which was mainly possible due to our ability to use data from over 1 million Tesla vehicles to source a large, diverse, and accurate data set. Solving full autonomy is a difficult engineering challenge in which we continue to believe can only be solved through a collection of large real-world data set and cutting-edge AI. Okay. Oh, so this is very interesting. Public sentiment and support for electric vehicles seems to be at a never-before-seen inflection point. We continue to work hard to drive down costs and increase our rate of production to make electric vehicles accessible to as many people as possible. Okay, so you guys can't deny this. No one can deny this. Every time you turn on your TV, all we see are new commercials from every OEM, every company of their new electric vehicle, what's to come, all right? You're seeing it everywhere. Not only that, if you watch CNBC, same thing. If you ever watch them, at least once a day, it seems like there's a new CEO, a new company that they're talking about and their transition over to the electric vehicle market, right? 2021 is the year that all of a sudden all these companies decided, okay, we have to be in this game because Tesla is eating our lunch. Okay, so with that said, let's take a look at some of these numbers. All right, so we're just gonna do a quick skim here, okay? Just for these numbers, we're gonna hop over to my model, my spreadsheet, and then we'll hop back over to this PowerPoint. Okay, so Automotive revenues, 10 billion. Okay, that's 97% year over year. Regulatory credits, 354. So this is, I like seeing this, okay? I had estimated 500 million in my model. I think a lot of people actually had picked 500 million. I think we all just kind of went with the status quo of last quarter. It's nice to see that they were able to have such a blowout quarter with such little regulatory credits being claimed for the quarter. So that's, I think, a very big positive. Almost 3 billion in gross profit for just with the automotive side. And okay, so look at this. 28.4%. Look at that, 28.4% gross margin. Now, if you back out the regulatory credits, I believe that comes out to about 25%. I already filled out my model, so we'll take a look at that and have those actual numbers. Okay, let's see. Anything else really notable that wouldn't be in my chart? Okay, yeah, so here's something just notable. Net income attributable to common stockholders. So look at that, 1,000% year over year. That's wild. Earnings per share attributable to common. Look at this. EPS. Okay, so we'll take a look at this on my chart or on my model. But look at this. Earnings per share, non-GAAP and GAAP. From a GAAP perspective, 920% year over year. 920%. 230% on the non-GAAP. Analysts weren't even I wasn't close. And I thought I thought I was way too optimistic. Oh my goodness. I don't even know what to say. This is just, I don't think people understand how good of a quarter this was. I'm sure people do. And we'll hopefully see it reflected in the market over the next week or two. Okay, so let's stop there and let's hop over to my spreadsheet. Okay, so here we see my model, my spreadsheet for the Q2 2021. And here you can see what my estimates were before. And we can see, how close, how off I was on a lot of things. And, we'll talk about what analysts had as well. Okay, so again, delivery units, we knew what those were. We talked about this during the preview that we expect this to go up a little bit. It always does, but more or less right in line. Here, you can see automotive sales just blew it out of the water, right? I wasn't even anywhere close. We touched on regulatory credits. Energy sales. Okay, so this was a major bright side when it came to Tesla this quarter. It seems like the mega pack really buoyed their entire energy business, and this quarter they were able to get out of the negative. So if we look down here, energy profits, right, you can see last quarter they were negative 101 million. And I had anticipated them, I'd mentioned I think it's going to take about 2 quarters for them to get back into the green. Well, no, they went ahead and they did it this quarter. So 20 million, and a lot of that was helped by the mega pack. And we'll look at some of those numbers in a little bit. So we can see services another, 951, that's great. Energy sales, we already talked about that. So total sales of just shy of 12 billion. Automotive profits. So here again, we can see 2,899,000,000. We already talked about the regulatory credits, energy, services, and other profit. So the nice thing about this is we actually see this declining. So that's good. So we see, before we were negative 71 million, negative 69 million, now negative 35 million. So Tesla's really making an effort to cut back on their costs and a lot of waste. So they're becoming more efficient with a lot of their services and other parts of the kind of non-revenue generating parts of the business. So total gross profits came out to about 2.8, almost 2.9 billion. We can see here again, automotive gross margins 28.4%. Now, if we exclude the regulatory credits, so if we take out this 354 million from their entire revenue. We get a gross margin of 25.8%. Okay, this is compared to 22% in Q1, and this is compared to 18.7% in Q2 a year ago, right? So that's year over year. Absolutely amazing. Now, I forecasted 22%. I thought there was gonna be a lot of headwinds with a lot of the shortages. I thought that they were gonna, have to pay for more and do less with what they had. I obviously that did happen, and we'll go over that when we review the earnings call. But somehow they still managed to eke out this amazing gross margin. Absolutely phenomenal. Energy, again, they had that 20 million, so they were able to get back in the green with that. So total gross margin 24.1%, not bad. Okay, so here again, R&D, this was surprising to me. I actually thought that this was going to go up substantially. If for no other reason, just because of what's going on with the 4680 batteries. So I had it at 650, and then I had 900 for SG&A, and again, I was wrong on both accounts. Somewhat close, at least with SG&A. But okay, so operating expenses. This one I was pretty darn close for this, and then operating income. Again, this is where we really start to see some of the differences in what led to everything, right? To this amazing 11% operating margin. This is insane. Again, keep in mind, last quarter 5.7, a year ago 5.4%. This 11% is just, it's beautiful. There's no other way to say it. EBITDA, we can see here, 2.4, 2.5 billion. Okay, so let's go ahead and scroll down. Okay, so this is interesting. Stock-based compensation. So because the way Elon's income works, the way his compensation is structured, is that if Tesla hits these certain milestones of company valuation, right? So if they're a $400 billion company, a $600 billion company, a $1 trillion company, there are these incentives set for these different benchmarks. And if Tesla gets to those benchmarks, Elon will be awarded a certain amount of compensation. So over the last year and a half, Tesla's been on a tear, right? So Elon has, there's a lot of stock-based compensation that Tesla has to pay Elon. And so what we can see here is this slowly being paid down. So what's left here on the books is another 474 million that has to be paid to Elon. And if you look down here, I wrote it somewhere. Okay, right here. Stock comp. All right, so 176 million was paid this quarter to Elon. So if you take 614 minus 474, you'll get that 176. So this is great. It means we're almost done paying all that off. And once that, this is done, that's just going to be one less thing that is taken away from Tesla's profits, at least for the quarterly returns. Net income, we can see it here, but here's what I'm more interested in, is the EPS, earnings per share, non-GAAP, $1.45. Even more impressive, their earnings per share, GAAP, $1.02, okay? It was 10 cents a year ago. Year over year, right, to $1.02. That is huge, okay? I was obviously nowhere. I was about 60% off on this, right? Everybody was off. I don't know anyone who's even close to this. 1.45 for non-GAAP. I had 97 cents. The high end was $1.16. So this is just wild. Okay, so again, we're just briefly going over some of the numbers here. We can see that everything was just a blowout. No need to beat this too much over the head. But I wrote some notes down here, some things I want to talk about with you guys. So first thing, they still have 16.2 billion cash on hand. They have a total of 7.8 billion in debt. Again, name me another automotive company that has this kind of balance sheet. Okay, you look at GM, no. Ford, no. Volkswagen, no. I mean, Lucid, no. I mean, who else, right? There's no one, right? Tesla is in such a healthy position, right? They are far from where they were 2 years ago. This allows them to make a lot of investments and move rapidly. So this is excellent. I had mentioned that the mega pack was a big reason why Tesla was able to get out of the red with Tesla Energy. And so here we can see it, right? So this was last quarter, 445 megawatt hours. Okay, when you think of megawatt hours, think like for a computer, for storage, or for software, for your computers with storage, you think megs, then gigs, then terabytes. Think of the same thing here. So this would be megs. So like a megabyte. So 445 megawatt hours. This quarter, with the mega pack, they were able to sell 1,274 megawatt hours. Okay, that's essentially 1.3 gigawatt hours. This is enormous, right? That's almost triple what they did last quarter. Now, solar, you can see here, 92 megawatts versus 85 megawatts. That quarter over quarter took a little dip, but still very strong performance. Okay, so that explains that, right? So that was amazing. Bitcoin. Okay, so this was actually not even discussed on the earnings call. So this was surprising. I think this threw everybody for a loop. Everyone is expecting Tesla to have to take a $100 to $120 million Bitcoin impairment charge. Turns out they only had to take a $23 million impairment charge. If you're not familiar with this, so what happened was because Bitcoin's so new into the world, a lot of the ways Bitcoin's accounted for on the books is still not really modernized or reflective of the current times we're in. And so the way it works is if a company like Tesla buys Bitcoin and say they bought Bitcoin at $30,000 a coin, okay, if Bitcoin dips to say 27,000, well, at any point in that quarter, Tesla would have to take the lowest point where Bitcoin dipped and they have to declare that as a loss. So even if you only went down to 27,000 for one day and then it was at 100,000 for the rest of the quarter, Tesla would have to recognize that as a $3,000 loss. Or so that's how we thought it worked. Okay, that's what everybody out there thought, all the analysts, everyone. So not really sure what's going on here. It might be that it's not just what the lowest point it hits, but how long it's sustained at that lowest point. So, with that said, that would explain a lot of why it was only 23 million impairment charge instead of the 120 million that we were all expecting and fearful of. Okay, and by the way, even if that did happen, it still wouldn't have mattered. They still blew it out of the water regardless. So keep that in mind. But Bitcoin mystery kind of solved. I want to look more into this, find out how it's actually declared. This will be important moving forward, but again, keep in mind, this impairment charge in the big scheme of things could actually be good because now that's the baseline. So it would have to go even lower than that lowest point for Tesla to have to get another impairment charge. And as we all know, Bitcoin has recently broke 40,000 again. So I don't think that's too much of anything to worry about moving forward. Stock compensation, we talked about that. Okay, so again, on a GAAP perspective, or even on a non-GAAP, here I have 51 cents above analysts, but analysts were just so off on this, right? We all were. I mean, not just analysts, but they're the big brain ones, right? They're the ones that know everything. They've got their MBAs and they know finance. Not us here at home. I mean, again, I'm just an engineer. What do I know about this stuff? But clearly, I know about as much as them because I was dead wrong just as they were. So I guess there's some solidarity there. I mentioned that this was all on the backs of just a Model 3, Model Y, with only 1900 S and X delivered. Oh, and one last thing, days of inventory. So I'll show you it back in the spreadsheet, but Tesla only has 9 days of inventory as far as vehicles, right? So that's how much demand there is. That's essentially, they make it, it's sold. They make it, it's sold. This is a very low point for them, right? This is a good thing, right? This means there's a lot of supply, or excuse me, a lot of demand and not enough supply. Okay, so we kind of went over this for pretty long, I think. If you have any questions about anything, or how I came up with this, again, the whole reason I like to share my model with you guys so that you can do it at home. I really think if you're going to be investing in a company in the investing against the grain methodology, where you go very heavy, kind of all in into one or two companies, you should really make sure you're doing your homework. And if you don't have your own models, then you're probably not really doing your own homework, or at least not as much as you should be. So feel free, use this as a cheat sheet. Take what I've done here. If you have any questions, I'm more than happy to help you out. Just leave a comment down below. I can tell you, what means what, how to do the equations. Some of these are just assumptions you have to make, right? Like for instance, the regulatory credits. That's a guess. We're pulling numbers out of the air, trying to make an educated guess. But a lot of these other ones, there's a lot of, they're equations, and then there's also a lot of historical data that goes into them. So again, that was the whole point of this, but let's go back to the PowerPoint and let's continue looking at that. Okay, so now we're back here on the PowerPoint. Let's just read some of these highlights here again. Revenue. Total revenue grew 98% year over year in Q2. This was primarily achieved through substantial growth in vehicle deliveries, as well as growth in other parts of the business. At the same time, vehicle ASP declined by 2%. Year over year, as Model S and Model X deliveries were reduced in Q2 due to the product update, and as lower ASP China-made vehicles became larger percentage of the mix. Okay, so really, I mean, we're just talking about efficiencies here, margins, making things cheaper, more cost-effective, right? Especially out of China. And then, of course, they mentioned S and X were essentially, non-consequential in Q1 or Q2 so far. So Q3 is going to be, we think this is a great quarter. Q3 is going to blow this out, assuming there's no, outlier kind of mulligan when it comes to chip shortages or anything of that nature. Profitability. Our operating income improved in Q2 compared to the same period last year to 1.3 billion, resulting in an 11% operating margin. This profit level was reached while incurring stock-based income expense attributable, I can't say that word, to the 2018 CEO award of 176 million in Q2. Okay, so we talked about this, right? So Elon had his stock-based income, 176 was recognized in Q2, and driven through new operational milestones becoming profitable. Okay, so we talked about this. So they're saying in spite of all this, they still managed to do what they did. Operating income increased year over year mainly due to volume growth and cost reduction. Again, Tesla is just starting to ramp up volume, right? If you think about the exponential kind of S curve, right? It goes up, over, and then flattens out, right? We are just beginning to turn, and then we're going to go up and then over, right? So we're at the very early innings. Let's see, where were we? Positive impacts were partially offset by growth in operating expenses, including increased SBC, Model S and X ramp, negative margin in Q2. Yeah, okay, well, we expected that. And the negative margin is really just because there was no volume of S or X. Additional supply chain costs, lower regulatory credit revenue, Bitcoin-related impairment of 23 million, and other items. So they're saying, in spite of all these headwinds, in spite of all of these things we had to account for and deal with, yeah, we still crushed it, is what they're saying. Like, this is a flex. It's like Tom Brady saying, yeah, I won a Super Bowl in spite of the fact that I had like a MCL tear. No big deal, right? I mean, that's what they're doing here. Okay, cash. Quarter end cash and cash equivalents decreased to 16.2 billion in Q2, driven mainly by net debt finance. Okay, so we already talked about this, right? This is the 1.6 billion they paid back, 619, right? That the difference. So they only took about 900 million hit. Okay, and then we already went over all of this. Okay, let's scroll down. All right, so this is what I want to look at. Global demand continues to be robust, and we are producing at the limits of available parts supply. While we saw ongoing semiconductor supply challenges in Q2, we were able to further grow our production. So they're saying that the limiting factor right now is parts and supplies, namely chips. Okay. US, California, and Texas. Production ramp of Model S progressed over the course of Q2, and we expect it will continue to increase throughout the rest of the year, given strong US demand. The majority of all Model 3 and Y production was delivered in North America. Build out of Gigafactory Texas continues to progress in Q2, with commissioning having begun in some areas of the factory. Okay, this is a big deal. We're starting to get some progress. Okay, let's see. All right, so China. While we experienced minor interruptions due to supply chain challenges and factory upgrades, production in Shanghai remains strong. Per our planned roadmap, we recently introduced a standard range version of the Model Y in China, which is a big deal because that means that when people buy the standard Model Y in China, that they're going to qualify for the electric vehicle credits that the Chinese government gives out. Okay. Due to strong U.S. demand and global average cost optimization, we have completed the transition of Gigafactory Shanghai as the primary vehicle export hub. Okay, so that's great. So because the U.S. is booming, they're using Shanghai as the export hub. Makes sense. All right, here's the one that I've been a little nervous to read about, the Berlin. While our global production lines continue to run as fast as possible, European demand remains well above supply. That's good, resulting in growing wait times for delivery. That's good, but it's not good, right? Because as the end user, that's frustrating. We continue installing equipment, have begun testing tools, and are working as quickly as possible towards starting production in Berlin, while growing import volumes in the interim. Okay, so we already know about a little bit of this. So a lot of the Shanghai, I think Model Ys are going to start coming from Shanghai to be shipped to Europe. So I mean, this is par for the course on a lot of what we've heard already through Twitter and other rumors and leaks and other mediums. Autopilot and full self-driving. After selling over 1 million vehicles equipped with radar, we've collected enough data to start removing it in some regions. The removal of radar, which is enabled by our collection of a vast data set of corner cases, allows us to focus on vision increase. Okay. Our first customers downloaded FSD version 9 beta in July, prompting strong positive feedback from current users. Okay, so nothing really new there, but keep in mind, this Friday at midnight, FSD beta 9.1 gets released. So get ready to check that out on YouTube. I highly recommend. Hyperchain Change is the one I normally follow. I love Ghali's just full of energy, right? It's hard not to get, it's infectious, his energy. So I highly recommend you check out his channel. I'm sure Ghali will be up at midnight for the new update just to see what changed over from 9 to 9.1. So and that will be a very big test to see what the improvement and how quickly these iterations and what is being fixed in them, right? Is it noticeable? I think it'll be very interesting, but check out Ghali's channel, Hyperchange. Okay, let's go down to battery powertrain. Okay, so this is I think the most important part of everything today is the 4680. We have successfully validated performance and lifetime of our 4680 cells produced at our Cato facility in California. Okay, that's great. We are nearing the end of manufacturing validation at Cato. Field quality and yields are at viable levels, and our focus is now on improving the 10% of manufacturing process that currently bottleneck production output. While substantial progress has been made, we still have work ahead of us before we can achieve volume production. Internal crash testing of our structural pack architecture with a single piece front casting has been successful. Okay, so what this is telling us is that it's viable, it's reliable, they've already tested it. Now, what they need to hone in is the actual engineering of production, right? It seems like there's a 10% of a bottleneck in the manufacturing process that they have to just iron out how they're going to go about the process so that it's not a bottleneck and so that they can scale very quickly and have volume 4680s. So to me, this is extremely bullish for Tesla and for the future of EVs in the world. The 4680 is going to be revolutionary. Energy storage deployments more than tripled year over year in Q2, driven mainly by recognition of several megapack projects, which this makes sense, right? We talked about it. Almost 1.3 gigawatt hours. Energy storage deployments can vary meaningfully quarter over quarter, depending on the timing. Okay. Energy storage production continues to be held back by supply chain challenges as our backlog remains long. I mean, this is the story of Tesla. They have no supply issues, right? Or excuse me, they have no demand issues. It's all supply. Like they cannot get enough parts. They cannot get enough chips. They can't have enough batteries, right? If they could have 15 factories, maybe then would they have enough supply for the demand at hand. It's just insane. Okay, so, all right, let's see what else. Anything else worth noting? We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. In some years, we may grow faster, which we expect to be the case in 2021. The rate of growth will depend on our equipment capacity, operational efficiency, and the capacity and stability of the supply chain. Okay, so this is just reiterating what they've been saying. So it's great to hear that they're still saying the same thing. 50% year over year is what their plan is, and to exceed that clearly in 2021. Cash, they have plenty of cash. Okay, profit. Okay, products. All right. Okay, so here we have some photos. All right, so here's a picture of Berlin. I mean, this looks pretty much done, right? Just need a little landscaping, do a little work inside. Here's their paint shop. That's just beautiful, man. Yeah, that's a paint shop. Look at this. This is impressive. This was Texas 6 months ago, and this is what it looks like now. Listen to this. Giga Texas, Giga Austin is set to be almost a mile in length. That's insane. Stamping press here in Giga Texas. Man, it's just beautiful. Body shop for the Model Y. And the great thing about this is these are pictures there, so that tells us that, right, they're getting ready. They're fine-tuning everything. I mean, that's what this tells me. People out there, little aerial shot. Shanghai expansion continues. I mean, they're just moving at an unprecedented rate. Okay, so here got more financial documents that we've kind of already touched on all of this. Let me see if there's anything else really noteworthy here. Okay. No, I mean, so that's pretty much it. Okay, so let's go ahead and let's review the actual earnings call. So what I did was I listened to the earnings call. I took a whole bunch of notes of all of the high level, really powerful moments of the call, and we'll just go over my notes and we'll talk about them, and then we'll wrap up. Okay, so let's go ahead and move over to those and take a look at it. So here we can see my notes from Tesla Q2. So again, you can see here when I did this. So the call started off with opening remarks from Elon, and the first thing he really kind of hit on, from the very beginning, he was talking about the global chip shortage that, he was saying remains very serious. They're doing a lot of stuff they can to mitigate it. What they've been doing is finding other microcontrollers, taking the chips from those and creating and rewriting firmware and applying those for the Model 3s, Model Ys, Model S's. And that's the only way they've been able to kind of bypass this chip shortage. And it's the only reason they got these results, is what Elon was saying. So throughout this whole call, he really stressed on the fact that there is a supply chain shortage and they can only move as fast as that goes. He alluded to at one point that one of their biggest chip shortages was for the airbags and seatbelts. And, you really can't ship a car without making sure that those work and everything that goes with it, the mechanism, the process, the computers for them are working properly. So that's the bottleneck right now. So with that said, it almost makes you wonder, like, what could they have really done this quarter? But he did have a little bit of optimism, not a lot, but a little bit of optimism, saying it seems to be getting better, but it's a headwind for sure. He touched on full self-driving subscription. He said that, it's not going to be a significant factor as of right now. That's more so next year. And really, before it was obvious Tesla does not want to talk about take rate, how many people signed up for it, if it meant people, canceled the FSD 10,000 package for the cars they had ordered because they knew they could get the subscription. They didn't want to talk about any of that. Elon stressed that before anything, FSD has to work. So once that happens, then they can get some meaningful data, and then they'll talk more about it. It was very interesting. He took the conference call from Giga Texas. You could actually hear in the background. You could hear construction. You could hear a lot of stuff happening. So that I thought was pretty cool. Okay, so he did mention that they do expect to be producing new Model Y in limited production later this year in Berlin and in Austin. So again, I feel like Elon and Tesla have had a lot of chances at this point to say, nope, not happening this year for Berlin. But they keep reiterating it's going to happen, that there will be limited production this year. This also kind of goes in contrast to Troy Tesla. If you remember, he had a tweet about a source he had that the Cybertruck will be made first in October, and then Model Y will come out afterwards. That was put the rest today. Not the case. Model Y will be the first vehicle to be produced in Austin. Prototypes are easy, production's hard. Elon Musk said this like 12 times on the call. You can feel the pressure and the pain that he's experiencing from Austin and Berlin. It's definitely taking a toll on him. I think you can feel it across the calls. He's frustrated. He wants to get things done. And, for someone like him, he wants things to happen things to have happened yesterday, not today, not in the future. So I'm sure this is hard for him. He has a goal. He doesn't want to fail. He won't fail, but he wants to move faster. And he sees a lot of roadblocks in his way. He did mention, so this was a phenomenal quarter. Absolutely phenomenal. But it's fascinating. He does not let that dictate his mood. He doesn't let that... so for us, the quarter, for analysts, for stockholders, like, yay, great. We had a great quarter. But for Elon, it's like, hey, man, it's just another day. Those are just financial numbers. I don't really care about that. We have all these other things we have to do, right? So we're nowhere near success or anything. And so he went ahead and said this quote, "The seeds of defeat are sown on the day of victory." So in other words, he was saying, yes, this is a blowout quarter. This is a great day, but we haven't won anything. We're so far from winning, it's not even close. And he was saying that this will never be the case with Tesla. They will never have this type of mindset. He also touched on the 4680. So he said, not counting on 4680 structural pack, have to have a backup plan with non-structural 2170. So what he's saying is, if the 4680 can't get into volume production by the time they're ready to deploy Model Ys out of Berlin or Austin, that they do have a backup plan to go with the 2170s. So I thought that was excellent. That was a very bullish sign. I know a lot of people are gonna be like, oh, they can't get the 4680 battery, they can't make it work, yeah, the sky's falling, whatever. Stop it, just stop it. I love that they have a backup plan so that if the 4680 battery isn't ready exactly when they want it, right when the factories are ready, guess what? No big deal. We're pumping out cars and we're going full throttle. That will not be the limiting factors, what Elon is saying here, and I love it. Okay, making great progress, but a lot of innovation to get there. Difficult to predict with precision when 4680 will be ready in volume. Exactly. So it's going to happen. It's not a matter of if, it's a matter of when. Some shutdowns due to part shortages, but hope they will be relieved in the coming weeks and months. Okay, so I think we all kind of know about that. Some FSD progress is not easy to see. 2 steps forward, 1 step back is still forward. Okay, so that was an interesting comment. I think he's seen a lot of feedback from Beta 9. A lot of people are impressed with it, but a lot of people have said it's not the step change that they thought it was going to be. But I think people need to keep in mind, and this is what Elon's alluding to, they took radar out. This is all Tesla vision now. Just Tesla vision. And that is a big step forward. Even if you can't really tell, it is a big step forward. And I think that's what Elon's alluding to. So with 9.1, it'll be interesting because I think that will be the first meaningful advancement since there's been no radar, right? So another way to think about it is this was Tesla Vision 1.0 with the beta release. And so now we're just going to start iterating on top of that. So it'll be interesting to see how these new updates come about. Highly confident that cars will be able to drive themselves safer than an average person. Okay, so then we get into the questions. So the first question was actually selected, was one of Rob Mauer's from Tesla Daily. You gotta check out his channel if you haven't. I watch it every day. His video is normally like 10-15 minutes long, but it's a great synopsis every day of what's happened with Tesla. Highly recommend it. But Rob's very respected in the Tesla community, and he actually had 2 questions that were asked within this call. So his first question was along the lines of Cybertruck, and what Elon said is that his team actually said that the engineering and the architecture of the Cybertruck are incomplete. So, now it's kind of the next step, next iteration. But Elon did say that the Cybertruck is it's a new model, it's a new architecture, so it's going to take a little bit of time. And then they also so Elon and Drew Baglino kind of went from this question. They started to kind of go off on tangents, but they did say that the Model Y will take priority and that the 4680 structural battery pack is the main thing that they're working on right now. So again, him talking about the Model Y takes priority. This goes kind of in the face against of what Troy had been saying about the Cybertruck's gonna be the first vehicle. Nope, it's the Model Y, absolutely. So even if there's no 4680 batteries, it will be the Model Y. So even without Tesla cell production, suppliers should be able to double this year's supply next year. Okay, so this was an interesting random thing that was said. Again, this wasn't even part of the question, but they said that even without Tesla cell production, so if Tesla makes no 4680 batteries, their suppliers should be able to double 2021's total battery supplied next year. So that's a big deal. So let's just easy numbers. Let's say we make 900,000 vehicles this year. They're saying that they should be able to deliver roughly 1.8 million batteries next year. Okay, not just cells, we're talking batteries, the whole battery pack. So that just shows the type of volume that they're going for. Drew chimed in saying that they're aiming to grow cell supply well ahead of guidance of 50% vehicle production target. So again, Tesla has said over and over that they plan on hitting 50% growth year over year, and Drew saying they're ordering well in advance, well more than that. So they have plenty of batteries being ordered and they're trying to get a bulk of supply is what's happening here. He said this is before internal battery cell production. They're aiming to overshoot cell supply for vehicles. Okay, so they're aiming to have an excess of what they make for vehicles, which makes sense, right? They don't want to have the batteries be the bottleneck. And then Drew also said if they have too many batteries, right, on hand, then they can take some of those and they can give it to the power pack or the power wall if there's an excess. And Elon said, I know I have it under Drew here, but Elon actually said that if there is a shortage of batteries, they will pull from Tesla Energy. So it's kind of a chicken and egg thing at that point. If there's not enough batteries, or not chicken and egg, but catch-22. If there's not enough batteries, well, they got to get it from somewhere. And right now the priority is to ramp up vehicles, right? Get as many vehicles out there. So vehicles will take priority. But it seems like they don't anticipate that being a problem because of the amount that they have ordered in advance. Okay, so this was interesting. So much interesting that CNBC already has an article out there about it. Just saying that Elon and Tesla are taking shots at Apple. I don't think they're taking shots. I think it's more so just stating the facts. But so Elon said that Tesla uses no cobalt in their LFP and almost no cobalt in their nickel-based batteries, maybe 2% total, right? So the problem with cobalt is that with the way it's mined, and there's a lot of like human rights issues with it. It's mined in Africa, from a environmental to humanitarian perspective. There's a lot of issues when it comes to cobalt. So a lot of companies are trying to move away from cobalt. Cobalt's also not as readily available in abundance in the world compared to like iron, for example. And so Elon was trying to contrast this with Apple, whose batteries are 100% use cobalt. So it was an interesting example that Elon chose to use here. I don't think it was a shot at Apple, but for some reason there's this narrative out there that Tesla is so bad for the environment that they're out there mining all this cobalt, and it's just a lot of fun is what it is. And I think this was Elon trying to address a little bit of it. Okay, so then another question came about or was read from Rob Maurer. Again, these questions are voted up or down, so he just had 2 questions that were voted very popular. So he was asking about the supercharging station and what the plan for that is. And Elon elaborated on it as far as the supercharging stations opening up for everyone. And what Elon said was, it's pretty straightforward. People have to download the Tesla app. Then they'll select, what stall they'll be at in a supercharging station. And then, that's pretty much it. You will need to have a proper connector if you're in North America. And they talked about how you can buy one or they'll have them there. At one point, Elon said, well, we'll have to see how we keep people from stealing them. And then Drew Baglino jumps in and says, no, we have a solution so people don't steal them. So I thought that was pretty funny. And then Elon also talked about how, if the longer it takes you to charge, the more expensive it'll be. Okay, so and then how there's also gonna be kind of peak charging. So essentially, let's say 8 a.m. is a very popular time for people to go charging. Well, it's gonna be more expensive to charge at 8 a.m. than it would be, say, at 2 a.m. Okay, which again makes sense, and it's already how it's done, and it seems to be working really well. It's kind of a supply and demand as far as time and people waiting and all that. But they're just gonna expand on that. Okay, so something that I love that Drew Baglino had mentioned is that, this allows them, by opening up the supercharging station, this allows them to go ahead and drop the cost for people charging It allows them to collect more revenue and allows them to go ahead and quickly open up more supercharging stations and grow out the network. Okay, this could, I hate saying the word monopoly, but by opening this up, this could allow Tesla to have a huge dominance in the entire electric charging market. You know, people love saying that Tesla is just an automotive company, but they're not. They're an automotive company. They have the gas stations, if you will, right? They have the supercharging stations, and they produce the electricity, right? From they came from solar panels and things of that nature. So, you know, they're kind of have the whole. We talk about vertical integration, but even outside of the vehicle, from charging and everything, they have that vertical integration going on. So here, Elon also says the network needs to grow faster than vehicle output. With this paradigm, Tesla is very far behind, okay? So this tells us that Tesla understands they have to make a lot more supercharging stations and quickly. Okay, so third question was about 4680 progress. And what they said is, you know, they'll definitely make them reliable and they're in limited production already. Right now, the challenge for them is with compressing the cathode height. So essentially what's happening is there's a manufacturing process where they need to compress the cathode to fit into the actual cells, right? The cells are the actual, what you would look at and you would think is a battery, those are the cells, okay? But really the battery is the pack with a whole bunch of those cells in it. But so the cathode, or the antithesis of the anode, the cathode is what they need to compress, and they're working on a production line assembly so that they can do that in a very efficient way so it's not a bottleneck. To iterate here, Drew comes over the top from Elon and says that it's not a science problem, right? It's not a can this be done? Is it possible? It's just an engineering problem of how do we do this most efficiently, most effectively? So on reliability, he said that they have validated performance and lifetime, and they continue to validate testing for a 1 million mile. So this tells you that there's very big, meaningful progress happening with the 4680. And then he says here, focus is on remaining limits in engineering. That's it. Elon jumps in, says massive amount of equipment on order and arriving for cell production in Austin and Berlin, but we'll have to modify based on learning from pilot. So what he's really saying here is that they ordered a whole bunch of parts and supplies so they can build batteries at these sites. But as they're learning from the Cato facility in California, that's their test line, they're realizing that they have to make some modifications or buy some other parts, or maybe they didn't need certain things. So it's a constant evolution. But the main impetus, I think, of him saying this is that don't expect that the second Berlin and Austin are open, boom, we're ready to go to the 4680s. Because that's not the case. It's going to take a little bit of time as well. Finally, he said, Elon said, most likely to hit 100 gigawatt hours per year next year, as far as what Tesla can produce with batteries. But then Drew came over the top to clarify, saying 100 gigawatt hour rate per year, and it's possible that they can. And again, just a clarification there. There's a difference between we will do 100 gigawatt hours versus a rate of 100 gigawatt hours per year. And then Drew iterated again, nothing fundamental stopping us, not a matter of science, it's a matter of when, not if. So that's great. All right, so we're almost done here. Emmett, I think his last name is Piper maybe. I always forget, but you see him a lot with Dave Lee on Dave Lee's channel. But his question was, can Elon do an interview on one of our YouTube channels, say Dave Lee's or Rob Mauer's? And Elon, I won't lie, he kind of seemed a little annoyed with this question, and not annoyed, but he wanted to tread very, very carefully because he knows that these are some of his biggest fans. But he also understands the importance of his time. And I mean, I think we all do. But so Elon said, well, if I'm doing interviews, then I can't do actual other work, right? It takes away from that. And I'm sure part of that's also any moment he has free time, I'm sure he wants to devote that to his family. And that's very fair. I mean, he's got a lot of kids. They're growing up quickly. He's got a wife. I mean, the man has to sleep as well. So, fair enough, man. Like, I get it. It's a lot's being asked of him. And this is kind of one extra thing. And I think the part where he kind of sighed is that it was asked if he could do it twice a year or for every year, if he could do it, hop on someone's YouTube channel. And so Elon said, I won't do it annually, but I'll do it once. So, I think kudos to Elon, right? I mean, you could tell there was a hesitation there, but, I think we all have to be empathetic with his situation, right? He's CEO of 2 companies. He's got, 3 or 4 other companies he's running. He's got, I think, 4 or 5 kids now. He's got a little baby. He's got a wife. I mean, he's getting older, right? Like, there's a lot going on here. I think we all need to have a little empathy for him as well. Okay, so shortly after this YouTube question was asked, it kind of parlayed Elon to go into talking about how these earning calls are going to go about moving forward. And the big change is that it's going to be done predominantly without Elon. So he said here, I will no longer do every single earnings call unless there is something really important that I need to say. So, at first I thought this was shocking. I was like, man, what does this mean? I had an overreaction to it. But then I took a step back and I realized this is actually very normal. A lot of CEOs don't sit there for every earnings call. Rob Maurer actually brought up a good point. Jeff Bezos, he hasn't been on a earnings call in a long, long time. So there's really nothing to read into here. I think Elon just sees it as a waste of his time, which in reality it is. I mean, all you're doing is pandering to a bunch of analysts and MBAs and finance people when it's like, look, here are the numbers, do what you want with them, but I need to get back to work, right? I have things to do. And I think, he's there at Giga Texas right now, Giga Austin, and he had to stop, interrupt everything he was doing just to hop on this earnings call. So obviously he was there doing things that are actually productive and of real value when anyone else can go ahead and, take over and do the earnings call. Now, I will say this could be very interesting. I don't want to read too much into this, but it'll be interesting to see who leads the calls moving forward, because that might give us an insight to if Elon were to step down as CEO one day, who would take the reins. And I will say over the last 3, maybe 4 quarters, Drew Baglino has been, it seems like his voice is the only other voice you really hear, right? You don't hear Zach's voice a lot. You don't really hear anyone else's voice, but Drew has no problem speaking up, taking charge, and answering questions. And the nice thing about Drew is, I don't want to say Elon will BS you, but Elon has this spectrum of optimism that he likes to put out there, right? I mean, for instance, when he said next year we could be at 100 gigawatt hour production, Drew stepped in to kind of put a little pragmatism on top of it, saying at 100 gigawatt hour run rate. Doesn't mean we're going to have 100 gigawatt hours, but we'll be at that run rate possibly. So if Drew takes over, that could actually be a good thing in the big scheme of things. But we'll see. I mean, we're 3 months away from finding out, how all that's going to play out. But okay, cool. So then the last couple things here was Cybertruck ramp will be difficult because it's such a new architecture. Will probably be our best product though. So I thought that was encouraging, especially since I have my order in for a Cybertruck. So, I'm ready for that thing to come out. And then, so this was very interesting because, people keep pressing him on the value of FSD and the subscription and all that, right? I mean, that kept coming up on this conversation or in this call. And he said, at the end of the day, the value of a autonomous electric fleet will be gigantic. He said it will be one of the most valuable things that is ever done in the history of human civilization. That's pretty powerful. I mean, he's been saying this for a while, so par for the course there for him. Also, keep in mind, there's obviously some grammar issues and spelling throughout this. I'm sitting here typing this up as I'm listening to the call. So, this is just my notes, right? So if anyone, wants to try to, talk trash to me or whatever about that, go for it. Leave it in the comments. It's all good. No worries. If anybody wants to, share some love, leave some things in the comments as well. I'm all about that. Okay, so we'll end it here with analyst Q&A. Frankly, it's absolutely hilarious how all of these amazing YouTubers have these amazing questions that are actual, I guess you could say, thought-provoking, and you could tell that they know what they're talking about. And here come the analysts with their questions, and it's, what's the attach rate for FSD so far for target subscription? And Elon just dismissed this question. He said it wasn't worth commenting right now until FSD's beta is wide released. Then another analyst asked, if there's any issues with regulators or anything like that, and Elon said, same thing he said last quarter, same thing he said the quarter before that. Regulators are not a intrinsic barrier for FSD. So he said regulators are actually working with them very well in the US. So again, he kind of punted on that one. And then, one thing that Elon did say, just kind of off the cuff, that I thought was interesting. He talked about how next year we could have 50% and maybe 100% year-over-year growth. But again, he said, given these types of estimates, he said it's so impossible, right? One chip shortage, one supply shortage, one anything like that, and everything's thrown off. So Elon was just trying to stress, it's really, the main things he stressed on throughout this whole call is production is hell, supply is very hard, there's no chips for anything, and giving accurate targets is nearly impossible. And you could tell he doesn't really want to do it, but you ask, so he gives his best guesstimation, and then when it doesn't pan out to be true, or he's slightly off by a week, 2 weeks, people crucify him. So, it is what it is, I guess. But Elon won't be joining these calls anymore, sounds like, unless there's something really important to talk about. It'll be interesting to see who runs them moving forward. But yeah, so that's pretty much Q2 earnings for Tesla. A absolutely monster quarter for them. They beat on every metric. First quarter with over $1 billion. First quarter posting positive earnings despite credits. First quarter hitting 11%. First quarter at 28 and 25% for margins. Just absolutely phenomenal. Most vehicles sold. Great production or progress on 4680 batteries. FSD subscriptions out. Elon's at Giga Texas. Model Ys are going to get rolled out this year at Berlin and Austin. Cybertruck is coming eventually. Yeah, lots of good stuff here. Very good quarter. Congratulations to everybody at Tesla. You're all from the lowest person on the totem pole to Elon, absolutely phenomenal. You guys should all be very proud of yourselves. I know me as a shareholder and everyone else, we're very excited. We're very happy for you. Beautiful quarter, amazing quarter. Just could not be happier. But okay, so we're gonna leave it there for today. This has been a long video, but hopefully you got some value out of it. Hopefully this proved to be something that help you digest a lot of what happened for the quarter. And if you missed the call, if you weren't able to sit there and go through all the spreadsheets like I did, hopefully this saves you some time, and you can 2x this video and really get what you need out of it. Again, if you enjoy this type of content, do us a favor, really helps us out. Hit the like button, hit the subscribe button. I love you guys all. Congratulations yet again to Tesla. You guys are phenomenal, and I'll see you guys next time. Cheers.